It was my checking account that was zero. Zero. And I said, are there any checking accounts that pay more than zero? They said, no. They said, if you open up a savings account, though, without checks, then you can get interest. I said, okay, how much? 5 basis points. 5. Not even 50. 5. Like 1/20th of 1%. That's it. I mean, how is a bank going to survive when it can't pay more than 5 basis points, when the Fed funds rate is 525 basis points? And I talked to this guy at the bank. He said, well, a lot of people have been pulling their money out and moving it over to Merrill Lynch and putting it in a money market account where they can earn about 5%, which of course makes sense. The banks can no longer attract deposits. How do you have banks where you can't have depositors? Because they can't afford to pay the depositors any interest because they're broke, because the banks have already loaned out all their money for 30 years to the US government or to American citizens. I've got a mortgage with that same bank. Bank of America has my Connecticut mortgage, and I'm paying 3.25%. And there's still more than 25 years left on that mortgage. They are eating it on that mortgage. They're losing a ton of money paying, only collecting 3.25%, right? And I warned about this as I had the mortgage, and as I was talking to people about this, and everybody was so excited about how great it was that everybody could refinance their mortgages. I just kept saying, it's great for the borrower. It's going to be a disaster for the lender. And of course it is. And the Fed doesn't want to put any more pressure on the banks by raising rates even more. It doesn't want to put any more pressure on the commercial real estate market, which has a massive amount of pressure on it already. So the Fed is looking for a reason not to hike. And so, they probably come up with one. But the minute they do this, I think you're going to finally see a drop in the dollar, like the next leg down in the dollar, which is going to spark a move up in commodity prices. The stock market already rose on anticipation of a Fed pivot, but we haven't seen any of that in the gold market. Gold prices, they did spike about $20 on that weaker than expected jobs report, or not jobs report, unemployment number that came out on Thursday. But we're still just treading sideways. We're holding below 20,000, 1,960. But we haven't seen an explosive move up. We haven't seen a big breakout in other commodities, oil, nothing. It's just been the stock market that has basically been the big mover, moving on anticipation of the change in monetary policy, moving from a tightening cycle to an easing cycle. But I think if the Fed doesn't hike next week, that could be the catalyst to get the dollar to resume the bear market or enter a bear market, get gold to break out and into new highs well above 2,000 and continue to move. And I think that is going to start to put a lot of upward pressure on consumer prices. I've been saying I think we're near the trough in year-over-year CPI, and I think we are. The last couple of CPI numbers have been worse than expected, meaning higher increases month over month, year over year. So we've kind of bottomed out at around this 5%. I mean, miles away, not even close to 2%. And then we're going to start heading up. And here's going to be the problem for the Fed. As inflation starts to pick up, after they've already paused, and as the economy is weakening, and especially if they've started to cut, right? So, because they may start to cut rates before the inflation numbers really start to get bad. But if they're not really bad before that first rate cut, they're going to get bad after it. And I think all this is probably going to happen, before the 2024 election. I'm going to talk a little bit more about that after I finish talking about this, because there's a lot of political news that has just come out. I want to get to that. But I think that rather than the Fed fighting inflation, it's going to be the government that tries to fight inflation, but not in any way that's going to work. I think they're going to impose price controls. And that's already happening right now in France. I've been reading these news stories. In fact, I tweeted about one today that the French government has basically forced French supermarkets, right? So right now it's just in the food sector, and maybe it's going to spread to other segments of the economy. But the French government is applying financial pressure to the supermarkets, grocery stores, not only to stop raising prices, but to actually cut them. And I think prices are going to be cut maybe 2 to 8%, something like that, on all these different food items. Now, this is not the reason that there's an inflation problem in France. It's not because the grocery stores are gouging the people. It's because the European Central Bank gouged the people with money printing. That is why prices are going up. Christine Lagarde, Mario Draghi, particularly Draghi, because he was there for a lot longer, he kept saying that the problem in the Eurozone was that there wasn't enough inflation. His main goal as the head of the ECB was higher inflation. Well, he succeeded. The goal of the European Central Bank was for the cost of living to go up more because it wasn't rising enough, and that would include food. So the fact that food is more expensive is the consequence of a deliberate effort by the European Central Bank to increase prices, right? Well, they succeeded. And also, all of the budget deficits that are being run by the European governments, including the French government, which the ECB has been monetizing. So these supermarkets, they're not causing the inflation. They are responding to it. They are victims of it. In fact, many of these companies, and I own stock in quite a few of them, but a lot of these companies, even though they raised their prices, they didn't raise them enough. Their costs went up more. And the French politicians are now saying, hey, look, your input costs have been going down. Why aren't you cutting prices? Well, the reason is because they didn't raise them enough when the import costs were rising. In fact, initially, as costs started to go up, a lot of these companies were reluctant to raise prices. They thought it might be transitory. They didn't want to risk alienating their customers. And so they were behind the curve. And so now that some of the raw material costs are going down, you can't say, oh, we're going to immediately start cutting prices if we haven't even raised them enough based on how much their input cost already rose. But no, right? The politicians weren't, mad at the supermarkets for not raising their prices when their costs went up. But now they're pissed off that they're not cutting them when their costs went down, even though they probably still haven't raised their prices enough to keep up with their costs. Their margins have suffered. I know that as a shareholder. But what I've been expecting is for the companies to eventually catch up by pushing on, more price hikes. But now that's difficult, at least in France, because the French government is not allowing this to happen. And so this is going to have broad ramifications in France. The one thing it's not going to do is produce lower food prices, because what's going to happen is these grocery stores, supermarkets are going to have to figure out other ways to make up for this loss. And so the customer is going to feel it one way or another. They're going to find ways to reduce the quality, or they're going to come out with new cuts of meat that they can put a price on that won't be a price hike because it's a different product. They're going to repackage stuff. I mean, things are going to happen. Or, there's just going to be less supply. And maybe you're going to go to the supermarket and there's just not going to be enough stuff there. Maybe some of the items that these supermarkets are not allowed to price correctly, well, they'll just stop stocking those items. So they're not going to raise prices because they're not going to have the products anymore. And so that will have accomplished the goal of the French government. Prices won't be going up, but it won't matter because there'll be nothing to buy because the stuff won't be there on the shelf. So now the supermarket can say, yes, we didn't raise our prices because we no longer stock those items because we can't sell them profitably without the politicians, sanctioning us. But the reason I'm bringing up what's going on in France is because I think that's coming to a theater near us pretty soon, because that's basically all they're going to have. When the price increases start to accelerate after the Fed has cut rates,